Hello everybody and welcome to the weekly wrap from forexlivetoday.com. Looking at the currency markets, today is Sunday 11th of December 2011, and once again we have a weekly review following yet another EU summit. So let's get straight into our charts. Starting off with the S&P 500. So you can see coming into last week, we finished the week with some pretty nasty looking candles on the daily charts here. However, you can see as the week progressed, they just continued these spinning tops, gravestone dojis, whatever you want to call them. And it wasn't until Thursday, which is what the market had been waiting for. We had ECB rate decision and press conference on Thursday. We had the fifth, yes, that's right, the fifth EU summit, trying to come up with something to help Europe out of this mess that it's in at the moment. So we'll talk about that a little bit in a moment. But looking at the equity charts, you can see a sell-off on Thursday, immediately bought back on Friday. So where did we end up the week? Well, we ended up the week actually a little bit higher than what we started it, but basically going nowhere. Now, we have got this heavy event risk out of the way. So into next week, there should be better opportunities for perhaps some longer term moves than what we had last week. I know I was getting stopped out at break even last week time and time again. It'd go 40 to 50 points into the money, and then it would just immediately reverse back on itself. So I was getting those stops to break even. Perhaps should have lowered my targets even further, but that's not really my style of trading. So no harm done really last week, but it wasn't the most profitable of weeks, but it was very quiet volume wise, participation wise, and even on Friday this candle here, this bullish candle, was on fairly low volumes. Okay, so let's talk a little bit about this EU summit. It's getting a bit ridiculous now. The fifth summit, and what have they come up with this time? They're going to form a new treaty. They're trying to get closer ties between EU member countries. Or they've got another 200 billion for bailout funds. The ESM, which is the new fund that they're setting up, which will eventually replace the ESFS. They're going to bring that forward a year. However, it's not really enough, basically. The EU also wanted to introduce a tax or a levy on financial transactions within the EU. Of course, the UK were having none of that, and Great Britain obviously vetoed that. So, there's still a lot of things that are, up in the air. And when you have this many member states, all with different political agendas, putting politicians in the mix in the first place. The ECB is still kind of standing back. They did cut reserve rates by another 2.5% on Thursday. So they are trying, and there were some bond purchases happening on Friday as well, even though they are publicly saying that they're not going to be involved in bond purchasing. They are still resisting the calls for any Euro bonds, which would be bonds issued by the ECB. The ECB is still saying that it's up to EU member states to get themselves out of this. So this is the tricky situation with the euro and with the EU, because you have so many different countries. It's not like if you have the US, where you have your US government, and then you have the Federal Reserve, or in Australia you have the Australian government, and then you have the Reserve Bank of Australia. But in Europe you have the ECB, and then you have 17 countries all with finance ministers, politicians who want to get elected next year, and this is why it's so difficult. So in the end, not too optimistic personally about you know the latest resolution, the latest summit, and of course there'll be another one in March. So let's all just let's see where we are in March. There's probably a good chance it will either be around these levels or probably a bit lower. Anyway, here is the daily chart, and you can see small ranges every day this week, but obviously downtrend. So let's get into the hourly chart, zoom out a little bit, and you can see it much clearer here. So starting from a peak here, we've got a low, we've got a lower high, we've got a lower low, another lower high. This one just spiked up to make a new high, but again came down to make the lower low, up to make the lower high again, and we're currently down trading at 133.68. So I am advocating, and I will be selling any strength in the euro next week. I don't think the market, after it's had this weekend to digest the lackluster, shall we say, EU summit on Friday, I can't see them, jumping out to buy euros personally. So yeah, my philosophy will be to sell strength. I won't be buying the bottom of this channel because I think it has the opportunity to break down. So I'll be selling the top of this channel and taking first target at the bottom of the channel, hoping for further breakdowns from there. Okay, and if we move on to cable, here we start with the daily chart, and once again on a wider view we can see this range that we have here. So 161.65, 153.50, so that's a very big range, but you can see this past week we have consolidated into a much smaller range here. So if we come into our hourly chart, actually I've got it here. Here is our hourly chart, and you can see our range here, 155.75 to 157.65. So in the current market conditions, well, especially last week, these are the things you want to play. So we've got euro resistance and support. We've got cable resistance and support. So I'm going to be talking a lot about trading ranges because at the moment we have no direction. We're coming into Christmas, low volumes, a bit of a Christmas rally perhaps, which will move against sentiment. So I can't see how we're going to get any direction. Where's the impetus going to come from? So range trading it will be for me probably until the new year. So cable looking good for some range trades along with the euro. Here we have dollar yen. A word of warning, I'm hearing a lot of analysts, even though they've been doing it for quite some time, but even more now, are really, really bullish the US dollar against the Japanese yen. Now, I can see where they're coming from a little bit now because the fundamentals have changed with the debt crisis in Europe, and obviously the US is not faring too well either. There has been some strength of the dollar recently when liquidity has dried up. Now we have had intervention from central banks, or shall we say concerted effort, and all joined at the same time to input some liquidity into these markets and into the banks. So that has negated the strong moves towards the dollar. But still, the reason I would urge caution is because we're still fighting this trend. And look at that. August 2007. We're now in December 2011, and it's a virtually unbroken downtrend. We have had some attempts at rallies, but they've never really made a new high that's been too significant. So although we do have some rounded bottoms here, I would not be going along for a medium to long term just too early. I'm not saying that it's not a good trade, and I know there's a lot of people who are wanting to trade this long. I'm just urging caution because there's been a lot of people who have been calling this to have bottomed for a long time, and they've been wrong every single time. So stick with the probabilities. Where do you see some really confirmed higher highs and higher lows? And then there's going to be plenty of time to join this trend when it does turn. Okay, so not too interested in dollar yen at the moment. And another one that I'm very, very interested in, however, is dollar Swiss. Now, this week we have the S&B rate decision, and you'll notice this big candle back here, and that was a previous S&B rate decision. This was when they announced that they would be pegging the Swiss franc to the euro. Not technically pegging, but as good as pegging. So they have indicated that they would like to weaken their currency further. So we have fundamental reasons why this could move up. Now if we just zoom that out a little bit, you can see at a critical point we're at. We have former support, new resistance. Really strong resistance at this point. Once this breaks, it could break and break hard. So I will be looking at this very closely early in the week. If we get a break to the upside, I will be in. Probably only will wait for an hourly close above 93.20, and then I'll be in straight away. Again, if it broke back down, I would quickly cut it and then just wait for the break above once again. As I've said many times previously, when you're taking a trade like this, it may take 2 or 3 attempts to get the entry right, but it will be worth it once it goes, especially if you get some decent continuation. So definite trade here as well. So we've got the euro to watch early next week, we've got cable to watch early next week, and also dollar Swiss. Now the final one I'm going to leave you with is the Aussie dollar. Now, the Australian dollar also reduced benchmark or reserve interest rates last week by 2.5%. That's the second reduction in 2 months. Let's have a look at the daily chart first. So you can see we are still in this period of bouncing around between these in this range basically, and it is again a fairly big range on the daily chart. But again, we've got this consolidation over the past week, 2 weeks, into the hourly chart, and you can see how these fib levels, which are taken from the previous high to the previous low, how important they are for the support and resistance. So you can see price moved up and stalled out here at the 61.8% fib, found support at the 50% fib, had one false break here. As soon as it got back above the 50% fib, worked its way up, 61.8, spiked, worked its way down, broke the 50% fib, retested, came down, touched the 38.2, and now we're back up at the 50 fib. So you can see just playing these fib levels. As you approach, you short, looking for resistance. If it breaks above, you cut and reverse long. If it breaks back down, you cut and reverse short. So most of these back here, this one here, this one here, 1 entry, 2 entries perhaps, and then you're getting really good pips on the way down. On a true break, you might like to wait for the retest and then short. So just playing these support and resistance levels, really profitable in these times of congestion. No direction, everyone's waiting for some sort of magical solution from Europe, which is not forthcoming. So the market is in a bit of a limbo. And when you have Aussie dollar, which is closely correlated with equity markets, risk trends, when risk trends are going nowhere, the Aussie dollar is going nowhere. So think about your correlations, think about what's happening in Europe, think about the sentiment of the market, think about Christmas coming up, there's always a bit of a Christmas rally, and then put it all together and think ranges, trade the support, trade the resistance, and keep it simple. Good luck everybody, see you all next week, and bye for now.